Today is Today is the 19th of August, 2015. This is Clueless8 Frank. This is a midweek market webinar for the benefit of all members, and this is purely for full disclosure. This is purely for financial education and not for any solicitation or advice. It's clear. Let me start off by asking a couple of administrative questions, not asking but mentioning. Let me just put it straight out. When I'm putting stuff across on the Twitter real-time feed, obviously that's going through directly. But when I'm putting stuff in the chat room, is there some sort of lag? Because I keep on sometimes repeating myself, because when I have the chat room open on one of my screens, and I know a lot of you don't have multiple screens, and I'm going to cover that in a quick second. It seems like you're missing out on some of the things because either you're too lazy to scroll back, or you're not seeing something that I put like 5 minutes before or 3 minutes before that. Can somebody comment on that? The ones who are having difficulty on that, and I know that that a lot of you have full-time jobs, which is a good thing to have, and that you're not tracking things, and you're kind of walking into the middle of things here. So can somebody tell me if it's a scrolling forum? Because at one point we'll probably create a forum-based stuff, but as far as I can see from my side, when I'm doing the chat room, or if I'm doing a mobile chat room, I can always see messages above. Can somebody comment on the fact that why there's so much repetition and why they can't scroll back?
I can comment on the contrary. I mean, it updates and you can scroll back anytime you're missing and you're just coming in at certain times.
Okay, I think that answers the whole issue, because I'm going to talk about some administrative roadblocks, because the fact is that, let's just put it this way, I'm delivering a lot of very relevant and pertinent content in the middle of a war. What's happening in the market is a war. It's a war beyond plebeians and beggars like us. Okay, I'm maybe a little bit of a bigger beggar because my trade size is maybe a little bit bigger. We're all beggars compared to what is happening in the middle of this massive war that's going on in the market. So if people are not willing to scroll back a little bit, check on things that were talked about. And again, the chat room is simply for discussion. I want to be very clear about that. The chat room is not the conduit for delivering information. The Twitter feed is very simple. Scroll back. At one point in the near future, yes, I'm going to put together some sort of format, and we're always evolving and improving, where you will be seeing the trades that have been put through during the day. And you can do that. I'm not going to do that with the charts. The charts are right there on the Twitter feed, but on the individual direct trades that are going through. I'll cover that in a quick second. But it was Mary who probably answered that question, correct?
Yes.
Yes. And let me just remind everyone, Mary sits in a very distant land, very distant. It's called Canada. So if she can basically figure this out in a very simple way, honestly speaking, and I'm being very direct, you guys know me, I'm very unscripted, I'll be very direct. Stop being so frigging lazy. And if you can't find, if 2 minutes later after I say something, and you're like asking the same frigging question in the middle of the craziest market that I've dealt with in a long time, and believe me, it's going to get crazier, then you guys need to basically just, fix yourself a little bit. So that's good. So that's covered. Now, second question is, 1 second. Somebody's asking a long-winded question. Get a plugin for your browser so you can see the Twitter on the side scroll and the charts on the screen. Notifier for Twitter is what I use. Okay, so let's talk about this. That's something that we can certainly utilize. And by the way, while I'm doing this webinar right now at 8:46 at the time, I have no reason to do this webinar. I have no need, believe me. I had one of my awesome days, okay? I'm doing this for the benefit, and I just want to make it clear, for every one of you. So please, stop writing like a zillion things that I have to read in a small window on the webinar section. Save it for a bit later so that we can discuss that. All right? Because otherwise, I can be scrolling back here on the webinar thing and listening to some tech wizards who are out there, and a lot of you guys are, okay? And basically try to do that. Let me focus on what I'm talking about, and then we'll go into the market in a few minutes. All right? So that's number one. Number two, this is probably the most volatile market that you're ever going to see. And I repeat, it's going to get worse. The chart that you're seeing in front of you, okay? It's saying here the meeting is full. The meeting has reached the maximum number of 26 attendees. Okay, great. Can somebody tell me who just joined right now?
HTML5 just came in.
Who's HTML5? By the way, Mars99, what's your name? I know that handle, been with us for a while. Mars99, can you introduce yourself? Mars99, are you alive? What's the weather in Mars like right now? Okay, fine. All right, so that's number one. Number two is, and this is extremely critical because I'm talking about, we all have to be in the same zone. I don't mean mentally, I don't mean monetarily. I'm talking about from a information content standpoint, i.e. the platforms. If you're not understanding my charts, if you're not really, and I try to make it, believe me, as humanly comprehensible as possible, there are two things you need to do, two critical things that you need to do, which is going to put a lot of money in your pocket. Believe me when I tell you. Number one, TradingView and freestockcharts.com is free. So if you guys are not in on Thinkorswim, which by the way is free too, put $5 in there and open an account. Because I used to use Thinkorswim for a couple of years with no money in there, a couple of $100 in there, just so I can use the charting system and learn. And I'm still learning because that's like rocket science. So TradingView right there, freestockcharts.com, which is run by Warden. You can get their paid version too for the real-time thing. And the the tradingview.com, which I've been using a lot lately. And believe me, in this type of volatile market, I don't need to preach to anyone. If you can't figure out my charts and follow it on your own screen, underline that word, follow it on your own screen within whatever time allotment that you have during the day, then please, you are going to die in this market. I'm telling you right now. This market, it does not have a specific short or intermediate term direction. And I'll get into that in a few minutes. So it's wake up time. I'm not doing this webinar so you can hear my ugly voice and like, oh God, here goes, this and that. No. I'm doing this because I feel very strongly that all of you need to be tuned in with the situation on the ground right now. I will get into those reasons, what they are. And many of you know what they are, but I'm going to be a little bit more specific. I've been talking to a lot of my old compatriots and stuff on the hedge fund side and people, on the street and stuff, and they are truly clueless. At least we have some sort of idea. If you know yourself that you're clueless, I don't mean Clueless8, but clueless, then, like they say, you can adapt to the situation better. Those guys have no idea whatsoever. And I'm talking for people who are running portfolios to guys who are trying to sell those portfolios. Believe me when I tell you. All right? So that's number two. So Another thing that you have to do, and I know I keep on harping on it, and I sound like a broken record, but I really don't care, because you guys need to care, because I'm doing fine for myself. Believe me when I tell you. My portfolio is happy, my wife is happy, my cats are happy, my dogs are happy. My kid is great. He's a little bit annoying at times, but he's fantastic. And you know what? We're good. But you guys need to figure out what you're doing. So if you don't take the group coaching sessions, for God's sakes, okay, for that minimal amount that we put out there, I don't know what the word stupidity is all about. Because the reason I'm not going to go out and spend my Saturday mornings or my Sunday evenings and sometimes my Sunday mornings sitting there and ask the people who took it last weekend, okay, at Sunday 7 p.m. We went on for 2 frigging hours. 2 frigging hours, okay? And how much did they pay? Forget the money. They paid what? 30, 40 bucks? I'll say this again. I don't even pay my dog walker that. I pay them more than that. All right. I mean, honestly, I'm not being like egotistic or straightforward. That's a joke. So if you guys are that stingy that you guys don't even want to enrich your trading acumen and your trading skills by taking the group coaching sessions that I'm spending forget an hour. I've never finished in an hour, 2 hours, and people who have been there will tell you that. Okay, every one of them, and go into it in depth. Then what can I say? Keep on shooting yourself in the foot and coming into the chat room and saying, "Oh, markets are going to go up a little bit." Markets could collapse 500 points tomorrow, guys. Markets could go up maybe 150 points. That dome that you sit in front of this right now, if you don't understand what that chart means, or whether what these free stock charts, all these lines and things, you think I draw these lines? And again, I'm happy, so I'm saying this, okay? I'm not mad at anyone. Of course I'm not. So, and you don't understand what each one of these lines mean. Then how in the world are you supposed to make real money in this market? What we are doing in the middle of this, in between the trades that I'm putting through, in between the reversals, in between everything that's going on, we are beating some of the best money managers in the world. I'm not exaggerating. I know there are day trading services out there who are claiming they're making like, oh my God, this and that, and good for them. I'm sure some of them are. But I'm talking about working within the framework of what we're doing, and whether it be in a short-term swing, whether it be buying analog devices, which was an earnings play, and making 4+ points on that first thing in the morning, selling it after hours, or getting out in the morning and doing it, making a point of lazy boy, or what was the other one that we played, RPD, which was my good friend Richard Hager, Ragar's thing. And I said, you know what, that's good, let's go out there and making like 80 cents or $1 out of that. In fact, a little bit more after hours. So sometimes, it doesn't matter whether we're adults, whether we are in our, whatever age we're at. It's you guys got to wake up. Okay, so you got to do that. You got to do these group coaching sessions. Do those 5-pack ones, because you take one coaching session, you're like, okay, wow, I understand part of it, but I think I'm a genius. No. Whose microphone is that?
So sad. No, my son's
Yes, I understand that. So just mute it for now. So so you have to do it. That's almost like mandatory. So if you don't do it, good luck to yourself, okay? Because if you're not understanding what the content that I'm putting out there, then you are really fooling yourself. That's all I gotta say. Like they say, that old saying, right? You can take a horse to the what? To the water hole, but you can't get them to drink. So just same with traders. All right, now let's talk about the Twitter feed. All right, let's talk about the Twitter feed. So let me drag that in. So there's no personal information here. And talk about the comment, talk about the trade alerts and the charts that I put out there. Let me scroll back to this morning. Let me scroll back to this morning because these are extremely critical. I'm not trying to scold anyone or anything. I'm just trying to help people to understand what's important. So there's a story being told here, a real tactical story. So if you're not understanding who the actors are and you're not understanding what is exactly going on, I don't expect anyone to understand what exactly is going on because it's a fluid market. There's a lot of stuff going on. We know what the real reason why the market's down. The market's down because oil is crapping. That's basically what it is. And that's causing a massive shift in the high yield bond market and the credit market, which I see in one of my screens, but I don't want to inundate people with that because they're not ready for it. Okay? They're not ready for it. I give enough, like my favorite term goes, right? Princeton, Harvard level macroeconomics comments and videocast education and stuff. I don't really want to make them a hardcore Federal Reserve economist, okay? So the point is that I put little comments in there. So 10 hours ago, so where are we here? What was 10 hours ago? I can't even remember. Oh, we were like 12 hours ago when we started, right? So the day started, the day starts like this. Let me walk people through this. Can everyone hear me and see the screen?
Yes.
Okay, great. Okay. Sometimes they say, what noise is that? Somebody looks like somebody's working for $2 an hour in Amazon warehouse. Okay, it's a bad Bezos, Amazon joke. Okay, come on. All right. So the day started 12 hours ago. Oh, great. We're doing a 12-hour time frame here. So the day started 12 hours ago at 9:16 a.m. I was a little late for class. So let me go back. I apologize. Patience. 9 hours, 12 hours. Let me scroll back. I will leave enough ample time for questions, so please don't worry. But this is critical. So my day normally starts off with putting some pre-market futures or what I find to be important. It primarily starts off with showing the S&P futures and a little comment which I started putting down, extremely important. Every word that I put down, guys, every comment that I put down has a beneficial message. It's not difficult to understand. All of you speak English, okay? All of you are legal, and even if you're legal, I don't really care. I won't call Trump, okay? And the point is that you have to read the lines. And over time, many of you know exactly what I'm trying to say. So I start off the day, very important, saying futures Fed minutes at 2 p.m. What's so difficult? Expect random volatility. Oh boy, we got that. The key word is random. So this is like an SAT prep, right? So you have to understand the weighting of the word. When I say random, I mean random. And there's going to be random volatility every single day till we cross over into October and past October 15. I repeat again, there's going to be random volatility which started like weeks ago, till October 15th, and then we're going to see some light at the end of the tunnel. It does not mean, I repeat, it does not mean that it's a one-way elevator down, and it certainly does not mean a one-way elevator up. It's more on the downside bias than it's going to be on the upside bias. Let me just remind you of that. But here's something key. If somebody wants to be a macro trader, like John Paulson did back in 2008, when he made gazillion billions shorting the credit market and the overall stock market. Read his thing. He had sleepless nights. I was on Wall Street that time. I know it. Markets used to have 500-point rallies in the middle of the massive deterioration between 2007, 8, and 2009. March 9, 2009. 666 S&P was the low. You think it was a straight line down? Yeah, in hindsight, everything is great. It was like a curve down. But while it was happening, what between the Lehman crash, between Bear Stearns, I shorted Bear Stearns. I wish I shorted all the way when it went to like 50 cents or whatever. Okay, shorted it somewhere around 22 bucks. Thought I was a genius when it went into the low teens and lower. The point is, it does not happen in a straight line. So let me get something clear in all of you guys' head. There's a person in our room, I'm shocked that that person is not here, who keeps on bothering me all day long. And I like that guy. And he happens to be Canadian. My brother-in-law's Canadian too. I like him sometimes. So the bottom line is that PMs on the side. So where are they when I'm doing this thing in the middle of the day? Forget it. I mean, middle of the evening, at night. So let me go back to this. If you think you're a macro trader and you're going to figure out that this market is just going to be on a one-way straight line down, you're never going to win, because markets will always do everything to fool the masses. So in between a massive deterioration where we can go to 16,000 on the Dow, and I'll show this in a couple of minutes, okay? Or we can go to even, no, I think 16,000 or maybe a little bit lower, who knows? And whether Apple falls to $100 or maybe to 90, you think you're going to make money just by shorting it and just, doing a one-way thing from here and boom? No, because in between, you all know that the volatility algos and the high frequency trading programs are going to blow you out of the water. Now, unless you have, a sort of a massive vault of extra cash, all right, and you just want to be in a one-way track, fine. There's an old saying in the business: markets can stay overbought or oversold longer than you can basically, what's the word I'm looking for? Longer than you can stay solvent. In other words, you can short something, you short a margin, a markets can keep on going higher, or you can buy something and the markets can keep on going lower till the point where you crack. So let me introduce something that you guys have heard me say repeatedly, which is algo HFT programs. Let me save that for the next 10 minutes. So let me go over this so I don't need to detract. So I start my day off by showing you guys this chart. Okay? So I show this chart here. I said, this is the inverse head and shoulders because that's what it looked like then. Now, is it any magic that by the end of the day, and believe me, my levels are pretty correct. Very correct. So this was an E-mini chart, right? This is the E-mini chart on what happened. This is a 1 hour chart. So I'm going to go 1 hour. So look at this chart for a second. Where is the level? The level here on the, this is, I said, do not force trades. I said all the right words. Okay. Trade light, that's for sure. You got to do that unless you read major inflection points like we did. So here I said the left shoulder was somewhere around 2070. Can everyone see that? Can everyone see that?
Yes.
Okay,
Yes.
good.
Yes.
Okay, good. So this is a complex head and shoulder because this is the
Yes.
2046 is basically the head right there. That's your head. There's your complex shoulders right there. There's actually one here too, which is around 2060 right there. And these are multiple head and shoulders. So let's get this out of the picture. Let's see what exactly happened today. 1 hour chart. Are we ready? Are you guys ready? Okay.
Yep.
Okay, good. So you got the head here. You got the left shoulder. We never came down yet to the left shoulder, I mean to the right shoulder, but we held all these shoulders. Now, did I not show you guys this thing first thing in the morning? So what's so surprising? I'm talking about some direct stuff here. I'm showing you stuff at before the market opens, that what the possibilities are. I'd like to remind everyone, which I've said before in my video cast, forecasting is a game of narrowing down your probabilities. Look, it's simple English. Everyone speaks English, right? I don't want you condescending, but seriously. So everyone speaks English. So forecasting and market tactical trading is a game of narrowing down or assessing what your best probabilities are. There is no 1 + 1 = 2. You've heard, guys ever heard me say this a zillion times in the market. So what's the point? So if you know what your probabilities are, you react to it. So you go back to that chart, you put this on your screen, people who use Thinkorswim, or everybody should use Thinkorswim, at least as one of their platforms. You don't need to trade on it, just get it. You all have a social security number, you all are, you all can put in $100, open a frigging account. I don't make any money off it, just do it. So you have that head here. So this is what happened during the day. Now, if back in my days when I worked, after I left Wall Street, I worked for this guy who used to manage outsource funds for hedge funds. He couldn't believe that I used to do this stuff, but he was a pain in the butt. That's the reason why I walked away from it. Best thing I ever did. So bottom line is that if you guys can't match what I'm putting together first thing in the morning to this, then you need to start doing it. It's really as simple as that. So let's go there. So I did this first thing in the morning with the SPYs, with the Dow Jones Industrial Average. What was the low on the Dow Jones Industrial Average? Can somebody tell me today? Can somebody tell me? Can somebody type it in? Perfect. Mars 99. Mars, what's your name? Oh, Millen. How are you, man? Okay. So 17,000. Sorry, mic not working. No apologies needed. So 17,282. That's what I see on my screen for the lows. Okay, so just everyone knows that. 17. 1 second. I hate this little box here. I have to always scroll up. Hold on 1 second. Yeah, so my low was on my screen was 17,283. So let's get this thing here. So 17,283. Can anyone tell me where I drew this right shoulder? Right at 17,282, right there. So when you look back at it, I'm not reinventing anything, guys and girls. I'm just showing you what the probabilities are. So we basically went to the right shoulder. This is the right shoulder right there. So looking back at it, while it's going on, and let me repeat something from a behavioral analogy standpoint. Just because you know something's going to happen doesn't mean you're not going to feel the pain. So it happened. I mean, I showed this first thing in the morning. So the point is that probability here, this was the upper right shoulder. This was the lower right shoulder. It got there. It got there. All right. So the bottom line is that there was nothing surprising about it right there. Same level that I drew. I didn't draw it. I simply attached to what all of you guys can see on your screens on any platform that you use. But that's how the algos work. And that's the reason why you're with this, why you're with this with the service, because I'm showing you this stuff. So anyway, so let me not harp on it too much. You know what I'm getting at. So the same thing applies with this. So post these charts because this is the things that I see in the morning. It does not mean it's going to do that, but I show you the range of probabilities. Period. Then I go ahead and give you a couple of comments. Have to read them. You have to read them. Then I show you these charts, which in over the past week to 10 days have been the best trading charts ever. If you don't know how to read them, then please sign up for the group coaching sessions, for God's sakes, because I'm not going to take time away from my tech admins and not pay them that frigging $40 for them to having set up all this stuff. Because that money that I'm making off spending 2 hours, that's like comes to $20 an hour, is not going to do anything for me on the weekends, all right? And I get yelled at by my wife because I keep on sitting here and doing this first thing in the morning. So you have this, you have these charts, and I'm going to go over them. Then I go ahead and post a couple of stocks which have been acting well in the morning, and the day continues. Then I show these charts, which are killer. I'm not going to get into them right now because these are the algo pivot high frequency trading charts that are delivered through bar charts. That's another day story. These are so precise. They are more difficult to read, but I make it simple for everyone. Well, somewhat simple. I draw the lines. I draw the line. So this is a downtrend line. That's why it's in red. I draw the support levels here. And what was the support level that I drew here? It says 207. It says 207.62. Like, you know, we broke that support. We went down to 207.35 down here. So this is just to give you an overview on what the pattern looks like. The head and shoulders still intact, but it's there. Then I go ahead and show you a couple of charts, and I keep on continuing the day with direct ongoing. This was put through at 10 hours ago at, oops, sorry. Oh man, let me go back again. This chart was put together at what time? At 11 a.m. At 11 a.m., right? So at 11 a.m. this was put there with this line here, saying this would be a major support level, like, you know, keep an eye on it, whatever. Here we're getting oversold. Now, people who don't understand the stochastics, what can I say? I've explained it a lot, but people who are in the group coaching sessions, they gotta learn how to read this thing here. It's not like 1 + 1 = 2, but you have to get deeply oversold. We did get deeply oversold, so let me just get straight to the final chart on that. And I kept on showing it during the day what it was doing. Right there, there was a small reversal. Can everyone see that? That little tail?
Yep.
Do you see this little curve here?
Yes.
Let me get straight to the point here, okay? Away from the technical mumbo jumbo. Every little curve, every little point is hundreds and thousands of dollars depending on the size of your trades. For God's sakes, there are people like Scott, okay, who are reading this thing, who spend enough time with me. And I've gone through these things over and over again. Who buys these calls? I mean, I don't want to bring you into the Scott, but I got to mention it, okay? Because I'm so proud of you. Honestly, I am. You know, he gets in these things at $10. He sells them at 21. What's the rest of you guys doing? You can buy one. Forget about buying 3 or 4. You're a major month. I mean, seriously. I mean, you know, it pisses the living daylights out of me when people are just so lazy that they don't want to invest time and energy in understanding the basic stuff. There was no guarantee that the market was going to turn around. Somebody said, oh, yeah, this was supposed to happen. No, it was not supposed to happen. And guess what happened? It did that. Let me just remind people. We made those 12, 13, 12, 11, 10, 12 points fast by one contract by 4. Forget about the people who bought 10. They made $11,000 in 35 minutes. Is it magic? No. It's called focus. So let me just go straight to the end of the day. Straight to the end of the day. Ladies and gentlemen, just look at this frigging chart. So this was the buy alerts right here. This is where the market goes. This is where the average person right here gets all excited. Oh, wow, now we're really going to go higher. We're going to pull that big stuff. No offense meant to anyone, you know. Markets are just going to keep on ripping up. Now, you're going to go to a technical level. You're going to hit the downtrend line, and you're probably going to overshoot. Now, why do things happen where things hit the up? Let's say, for example, the bottom of the triangle, which I've explained many times in my coaching sessions. Quick snapshot. Remember this? Remember the market structure lows? This is what's going on. This is what's going on. This is what's going on. And this is what's going on. And I cover all this in the coaching sessions right off the bat. So it goes straight up here. Everyone gets like super excited. What do? I basically start scaling out. I start scaling out because I don't trust anything in front of me. Algos don't trust anything. They know exactly how you guys think. They know how you guys excited with seeing green on the screen. Sure you do. So stop thinking everyone's a frigging genius. I don't think I'm a genius. I think I'm really stupid. That's probably the reason why I do well. You guys, oh, wow, it's going out. It's breaking out. We're going to break out here and make a new high. Bullshit. And so it keeps on going. And I keep on saying monitor levels mark. Can everyone see this, by the way?
Yes, sir.
Yes.
Okay. And 1 second. So good. So this is like the serious. This is serious stuff here that's going on. Okay. Because it can change your. Let's put it this way. For people who are trading, if they think this is a frigging joke, that's fine. You know, it's a gamble. I'll throw in money. You know, we'll make a little bit of money. You know, this and that. To me, there's some serious money to be made in this market every single day. And even if it's not every single day, every single week. So what is this Martian move crap? This is the, okay, sorry. So basically you have a, what you basically have is the market gets there. The market gets there. It overshoots because I see that on my screen. Bear with me 1 second. Let me just show you. Bingo. Can everyone see this? I didn't post this chart, okay? So it overshoots. See that line there? Right there? Right there?
Is the overshoot?
Okay, it overshoots, okay? Now why do things overshoot? Things overshoot. You ever tried like falling over? I know some of you go like, you know, up in the mountain and stuff. You ever rolling down a mountain? It's called momentum, right? So when you start rolling down, or if you're skiing somewhere up here in the East Coast, you know, out in Vermont or Maine, okay, Sugar Bush, Killington, name it, all right, you're skiing down, you gain speed as you're going down. So markets are the same thing. When they're going down, they gain momentum down. When markets are going up, they get momentum up because they know exactly how people think. So you have to control your mental thoughts. You know, you have to follow these charts. Here's a big downtrend line. You think it's just going to one way straight up? What did the Fed exactly say? I mean, none of you actually understand that. I don't think I fully understand that. I don't think the Fed even understands that. The Fed's in a very big quagmire right now. I'll get into that in a second. So boom, oil turns, I'm showing it. Boom, it's moving, market's moving right there. So what's the alert that I put out there? Can anyone remember the alert that I put out there?
Mind your own trades.
No.
Oil controlling volatility.
I'm sorry, what was that, sir?
Oil is controlling the volatility.
Mm-mm.
I think you mentioned the take the profit, intraday profit before it
Thank
loses.
you very much.
US,
Thank
US
you very
dollar is
much.
crashing.
I basically put this through right around the time that things were going nuts. Okay, right there. I'll show it to you. Okay, I always say, because that's my code word, trader alert. Sold 60% trading buys from lows. Average ROI 80 to 90%. 60, 70, 80. As the market kept on going higher, and as we breached through these levels here. Okay, well, look at my lines. If you don't understand my comments, please ask me. It says here, I kept on saying, manage your own profit. Don't let, this is the most key word, because I know many of you, and I feel bad for you guys. And that's why I said in the chat room the word idiot, idiocy. Okay? I'm sorry I said that, because to me it just kills me. What kind of idiotic behavior is this? I'm putting it out there. Don't let intraday massive profits disappear. Let's see somebody step up and be really honest, because I've been there. I know it. And say, you know what? I really let a lot of my profits go. I need somebody to stand up from here and tell me that. Because that'll be like the most cleansing thing you'll do. And and this isn't some Tony Robbins bullshit, okay? But seriously, or some evangelist crap. But who said I did?
Guru.
Thank you. Because Guru has done very well working with me in the coaching sessions and everything. And today, you know, he did one of them. You're telling me that none of you did that? I don't believe that. You're telling me that all of you basically sold, like pretty much like, you know, and took your nice profits as the market was ramping? You're telling me you didn't let go of a good chunk of your profits because you sat there thinking that the markets were going to go higher? Please be honest.
I did.
And who is that?
Bix.
Okay. Who else? Step up, man. Step up to the plate. And ladies and gentlemen, please.
I sold the downtrend line.
Now, Scott, I know you did really well, but I mean, who else? And that's why he's laughing. That's not a laughter like a derisive laughter, like, you know, on other people. He knows what he did. You telling me that none of you guys actually let go of a nice chunk of profits because the market reversed that quick, right when we went across this and we overshot?
I used trailing stops. I didn't have a problem.
Excellent, excellent, excellent. There you go.
Learn them, guys. Learn how to use trailing stops. You don't trust yourself.
And who is this?
It's Jason.
There you go. Use trailing stop. Scale and trail. Scale in. Perfect. Okay? Because right when this happened, guys, just look at this. Look at this. Look at this right here. This, you know, I mean, this is the nature of the beast. So here you have these stochastics just moving up, just the way I said, like it was going to curl up. We don't know whether this is going to curl up, whether it's going to fall down again, create a double bottom, which would be fantastic. If we retest the lows again, we're going to have a massive rally, which needs to be sold. Which needs to be sold. So when I draw a chart like this, you know, like the dome, right? I'm not just drawing this because it looks pretty. I'm drawing this because this is what it's telling me, that that the markets most probably will not breach best case scenario, given everything that we're seeing. I'll tell you guys that why in a second. Okay. If this level right here, which I've shown many times before, that this is going to be a major hurdle for the markets. So do we know if the markets are going to 1 second, if the markets are going to basically move from here tomorrow and just go like this, or whether they're going to go like this, which I have the arrow right there, okay, or whether or not they're going to come down here, right there on this uptrend line. These are uptrend lines, you know, right there that I draw. and then basically make a move from here up there? We don't know. Now, this is where I want to get into some real details here. When I'm throwing these charts out, okay, guys, I'm not just looking at this. I've explained to you guys from day one. Every one of you who've been in the coaching sessions know what I talked about. If you could just look at charts, front charts, and I just put a simple stochastic principle in there, indicator, internal in there for people to guide. And it's like a little GPS map before you hit the next pothole. And GPSs don't even give you the next pothole. Those are algos. All right. So then life would be just one peachy little thing, just put it out there. It's never like that because we don't know whether these algos are going to do this on the internals or whether they're going to go straight up and then sell right there, or whether or not this is going to come down again, and like this and then move up, or whether they're just going to move up directly from here. And then, of course, there's going to be another sell point. And once they get up here, whether or not they're going to basically vacillate and move sideways and confuse the hell out of everyone, get people a little bit excited, like, oh my God, this market can never come down, and then all of a sudden crash. So what do? I'm looking at, I have how many? I have 10 here and 2 more. I have almost 12 screens. So I'm looking at tons of stuff at the same time, trying to process that information in between all the news flow that's coming out. Looking at the VIX, the RVX, looking at the dollar, looking at the 10-year bond, looking at oil, which is really driving the market right now, okay? And reading all between in that, making a few phone calls here and there. And let me just put oil up here, and then trying to make a determination of whether or not it's a story. Now, let me show you this, what happened today, all right? Oil. First tell, I kept on showing the charts on oil. Yes? Some of you noticed that?
Yes.
Yes? Who else noticed it? And please be honest, if you haven't noticed it, there's always time. Remember, you're all living, breathing, still listening to, this beautiful webinar. You're all listening. So there's always hope because tomorrow brings another great day to apply a lot of these things that I'm talking about at 9:28 in the evening, Eastern Standard Time. So please tell me on the people who did not follow, or I kept on saying those oil charts on the Twitter real-time feed. Say no, I didn't look at it.
I did.
Tell me somebody who didn't.
I didn't.
Okay. So what was this thing here? RUTIWM holding 1200 support. Oil reversal is critical. Monitor. Where are the oil charts? I showed a US dollar that was right after the Fed. I did say that one second, not this. I did say that the dollar would basically try to get down there. Then I put here oil controlling market volatility. Study the chart as posted. I did it a couple of times. If somebody was just looking at this part, they could have managed their trades better than any single fund managers who's running all your, excuse my French, bullshit 401ks or your mutual funds out there. I worked through them. I know it. You could run your portfolios better than any one of those guys that you're paying 8, by the time they take your fees, it's almost like 8%, believe me. And between taxes and fees, they're taking a hell of a lot. So this was the tell. Right after, I even put it there. I don't know how more descriptive I have to get. Even a fifth grader, that show on Fox or whatever, a fifth grader, with like grade yourself again, a fifth grader, whatever, can read this chart because they're not overthinking. What does this chart say? Can somebody tell me? Please. So it helps everybody else. So somebody step up and please tell me. When I said Fed meeting ramp and retest of lows.
Bottom. Triple bell.
because let me stop myself for a minute here. If people are not understanding the charts I'm putting through and a running commentary on the market, they won't be able to manage their trades. Yeah, they'll make some fluke 1 or 2 points trades here and there. I'm talking the meat, the real juice, okay? The steak of the profits. They'll never make it. So this chart is very simple. So can somebody step up and just explain to me in about a minute, like an elevator pitch, 30 seconds, like what they understand from this chart? Please help, not, don't help me, help the others in explaining this, please.
I can say a couple things.
Go ahead, just like I said, keep it within less than 60 seconds. I mean, no, I don't want your analysis. I'm saying, what do you understand from what I wrote?
You stayed inside the Darvis box. You went up to the top. It bounced off. It shot back down to the bottom to retest. So it could be another buying point.
No,
if we hold the
bullshit.
box.
Bullshit. Let me just stop you for a second. Who's this, Ubu?
Yeah.
Okay, no, that's not how you read this chart. Let me just explain to you. Don't take me the wrong way, okay?
No, don't.
Okay, so here is the thing. I said Fed meeting, ramp, and retest of lows, okay? So what the bottom line is, I take that back. Yes, you got a little bit more advanced with the Davos box. What I was trying to say in this, look, right white arrow, Fed meeting ramp. Right here, the Fed basically came out and said what they did. Oh, of course, it leaked out. Great. Okay, Bloomberg idiots, they leaked it out. So bottom line is, so I apologize. You went one step ahead. You looked at the overall technicals. I was trying to just give you the message, what was going on. So right here, this Fed meeting ramp right here that happened was big money. This was 11 points on the S&P 500, guys. Okay? 4 S&P calls, $4,000. Sell it at, forget it, 12 points. So you go figure, okay? $4,000. You like, that's it. So you're selling it at 23. That's great. $4,000 goes to up there, right? Almost $8,500, $9,000. Sweet money. Go tell somebody out there that you made that in 30 minutes. So anyway, so let me get this drawing tool out here. So you had this big move here. Yes, Ubu's right. Up to the upper Darvis box, which also happens to be this level here. And right when things didn't, it didn't break that. I mean, the Darvis box could have expanded, right? And I said oil controlling market moves and algo HFT programs. That's exactly what the algos did. Somebody said they couldn't figure out this drop, which was the oil inventory numbers, just so you know, and please try to understand this, was because the oil inventory numbers came out and Rip was extremely helpful in putting it out there, and then I put out the numbers out there. Basically was a big surprise. The algos apparently didn't know what the hell they were doing. I did post that article on Zero Hedge, from Zero Hedge, directly on the Twitter feed, that the algo HFTs basically got really, excuse my French, effed up. All right? So they didn't know what to do. So there was this massive sell-off, because the inventory numbers are much higher than what they expected. So this was the big, and of course it dragged the market down big time. So then you had this. So then once you got to the top of this here, up top of the Davos box, and you see this reversal candle, what do? Do you sit around and hope the market's going to go up? I said oil is controlling the market. I said that from the morning. So the bottom line is that, and it comes down here and then it tries to bounce. I still think that 40 is pretty much for now a definitive low on oil. Another way you read it, which I've shown before, is that beautiful chart that I drew, which looks like frigging bad artwork. And somebody tell me which one I'm talking about before I get there. About oil. Okay. Right here, DWTI. Does anyone understand this chart? which got like the highest number of likes on stock twits, which I don't really care about, but I'm just saying. Does anyone understand this chart? Because this is directly related to whether you're trading Amazon or Facebook or Netflix or Apple or Priceline or whatever you're trading, EOG. Somebody just step up and say, no, I really don't quite understand this chart. Can you explain it to me, Clue? You all understand this chart, right?
Yes.
Everyone understands this chart, correct?
I believe I do.
Okay. So basically, that's good.
More so.
What was that? So if everybody understands this chart, do they think that, you know, this is basically the inverse of oil? And by the way, I'll be the first one to admit I bought it in the 60s, all documented, sold it like 80 and then at 100, and wish I'd held it all the way up to 200. That's what happens in the market, right? An extreme reaction. So I was pretty much gone at these levels. Anyway, it's fine. Didn't expect it to go this berserk. But so everyone understands this chart, the DWTI. So everyone thinks that maybe oil has bottomed, but it might not be the case. For all I know, this could shoot up and go to 250. Oil could go to 35. But it's good that you guys understand it. And this, the key thing to take away from this chart is that look how long oil has stayed. I mean, DWTI, which is the inverse of the oil, has stayed overbought. Can everyone see that?
Months.
Yes.
Yes, right? Everyone can see that, right? So let me bring a very, very important point here. Markets can stay oversold and overbought for much longer than all of us as humans can understand. So if somebody says that this market is completely over because it's, you know, that it's, you know, because the things are overbought on a weekly basis, then they don't understand how things work. When money starts flowing into a particular asset class, you and me can just sit there and say, oh, it got overbought, so it's going to get sell off right away. Short term, sure, but not like a, you know, big thing. So without harping on things too much, and we're going to hit the market in a second, I just want to point out one thing. You have to follow the Twitter feed. I mean, this is like, you know, I'm showing this Bollinger Band entry. For God's sakes, I mean, if you guys just followed this, you could have sold here when it connected with the 5-day moving average right there, this line. It's right there, 5-day moving average. If you don't understand the basics of these charts and what these turns and all this thing means, and this means a lot of money, then I'm telling you, a lot of you who are trying to be, again, I'll be direct in the face here, trying to be all stingy, like, oh, I don't want to give this guy like another $40 to take it. Then say, I'm paying him every month anyway. Well, I don't need your money. And honestly, I mean that in a nice way. So feel free to sign up for the frigging coaching session so you can understand and not feel like an idiot in the middle of a, you know, market, which is going to get worse and worse and volatile, both on the upside and the downside. So please feel free to do that. And if you don't come in saying that, oh, you don't quite understand what's going on. So then I go ahead and put these things through. For example, on the RUT, very clean levels, very easy to understand what's going on. Here we had a big deterioration in the Russell 2000, yet we didn't have a complete collapse on the stochastics. I even showed it as a positive divergence. That is a positive divergence for now. Amazon, all these stocks, what can I say? I draw the channels, then you have to figure out what you want to do with it. Whether the dollar goes to 95, I have no idea. So, and then the end of the day, I put, and Mary knows these well, because it came from her side of the picture a long time ago, one of our friends, the swing 533 charts, directional charts. We have a hammer reversal here, yet we have a lot of negative divergences here with the crossover. okay, with the crossover here. This was put together at what time? At 2:42 p.m. Obviously, it doesn't look like this by 4 p.m. because the market gave back almost 162 points. This was in the midst, midst of the rally. So again, this is another thing that I explained very well. And these things are extremely important for me to determine what's going on. This one, for example, is what the markets ended, I believe, 6 hours ago, which was 3:33 p.m. I'm sure between 3:33 and 4 o'clock we had a big showdown. So anyway, so let me move this. Let me go back to what I see in the markets right now. Everyone pretty much clear about the Twitter feed and how to read some of the things, or at least force yourself to read some of the things? Yes?
Yes.
Yes.
Okay. I'm not, again, this is not like I'm not your kindergarten teacher, okay? I'm just trying to explain, like, if you get even 60% of what I'm trying to put through out there, you're going to be a heck of a lot less confused about the market than I am. And believe me, it didn't feel good when the markets were like, cracking up upside down. But you got to, like I said, keep your position small, keep a lot of cash on the side, and take advantages. We didn't know the market was going to turn today. I repeat again, somebody came to me, somebody very smart, and said, you know what? Oh, when these type of things happen, the market's going to turn. Bullshit. Not true. The market could have been down 700 points. And I'm not kidding. I mean, of course, the stops would go off, and I mean, the triggers would go off, and they shut down the New York Stock Exchange. But the market could easily be down 500 points. So let me get behind some of the reasons of what's going on here. A lot of you guys know that. This oil collapse that we're seeing is not a joke. This is hitting, let's think outside the fishbowl. What's the fishbowl that we live in? It's called the United States of America. And pretty much that's it. We think we're like, that's it. Whatever we do, thing. I still think we are the dominant force in the markets, and that's fine. So this oil collapse and the commodity collapse is basically creating havoc. When you see EOG fall, what is it?
$4 in one day. That was big.
Dollars don't matter to me. It's the visuals that matter. I'm serious. I'm just telling you right now, and I'm trying to get the visuals up here. And I put, well, the dollars are equally important, but come on. Okay, so why is the SPY still coming up? Hold on. Because I put some very powerful charts on EOG. It looked fantastic yesterday. Okay, so here's EOG. So you have this massive move down. I mean, here's a beautiful cup and handle. And this, I want to point out one thing, because every chart is like, I need to precede that by saying what's going on. Technicals at this point almost are meaningless, guys, because these things are just hitting the market from Germany, from Vietnam, from Thailand, from Chinese markets that are acting like crazed, meth addicted, opium dens, in Shanghai. I'm dead serious. If people know history, you know what I'm talking about, the opium dens that the British created. So anyway, so the bottom line is that it's just hitting. So you can rely on basic technicals. Yes, you can rely on some basic technicals on what I'm showing in this and that, but there is no certainty whatsoever. So VIX, and I'm pointing out, and some of you guys too, who are very, who have been trained very well in looking at technicals, please look at the technicals, but don't believe anything you see on the screen. When I say, like, you see these prices on the screen, I see prices flicker. These option spreads on the S&Ps are like $3 sometimes. This is just telling you there's a lot of garbage going on in there. And they're trying to, screw people inside. When I first bought the S&P calls, I bought them at like 1080. They dropped to like $8 within 5 minutes. I bought more. Then they went to 23. Can anyone tell me where they ended up, the 2075 calls? By the end of the day, they ended up at 890. I sold them above 20, 19, 20, and the remainder of them at 21 plus. And then they end up at 9. So this is what I'm telling you. Volatility is intense. So this is what's going on here. So you got this the EOG and you get this massive drop here. Is that you and me selling? No. This is massive hedge fund liquidation. This is like panic. Does this mean this is all of a sudden going to turn around and just keep on moving higher? Just like that? I don't know. If oil goes up $2 or $3, EOG is a terrific company. It'll basically just go up on the trend line. Yeah, it's gonna break through. I mean, this was doing fine. This was this morning. It was up in 81, almost 81. I mean, 80 and a half dollars. So Scott is right. I mean, a $4 drop, but look at the visuals. So just trying to let you guys know, what is going on. So what's going on? Number one is this. The high yield credit market, which as traders don't expect all of you to understand, some of you do, is in really a state of panic right now. Okay, and the way you can track it is you can go to HYG, which is the ETF for the high yield. Okay, the ETF for the high yield, and 1 second. A lot of these text charts, by the way, the patterns are fantastic. But again, I don't believe it because this is the way it is. The high yield HYG. Let me get this. So this is the high yield. This is the best way you can track the what's going on. The high yield bond index. You can track it through your, you can track it on TOS. It's not coming up here. Hold on. All, by the way, is not doing crap after hours, so don't expect any miracles tomorrow. So here's the high yield bond index on a weekly basis, right? Whoa, baby. Does this really look like a chart you want to buy right now? Yes, it's at the bottom of the Darvas and this and that, but the way I'm looking at it, this thing wants to go down here to 77. Do you know what that means for the market? This market's going to go to 16,000. Just letting you guys know, because the surface, I've explained this before, I explained it again. Stocks are just the surface of what the equity, how the market trades, the equity market. The credit market, which is government bonds and corporate bonds. This is corporate bonds. This is high yield junk bonds. Junk doesn't mean junk. It simply means lower rated bonds, right? So this is what's going on underneath the surface. I posted enough articles out there which talked about some big wigs talking about it, like Jeffrey Gundlach, Carl Icahn obviously talked about it. I don't really give this guy, too much credence on a lot of the stuff he said. But anyway, a lot of really smart people are talking about the fact, even Warren Buffett's warned about the high yield bonds. Even the Fed has warned about high yield bonds. Now, the high yield bonds are not just us. Like I was talking about the fishbowl, there's a lot of stuff going on in emerging markets right now. Okay, a lot. And China, believe it or not, is an emerging market. Despite all their wealth and their military power and their money and their billionaires being created every month because they're basically screwing their own people. No offense, Ben. The bottom line is that they are extremely, they're in a credit situation which is very difficult for them to handle. So they're trying to contain it. So we have a worldwide situation with a high yield panic. Okay, and so what's happening is that the high yield market here too, because of low interest rates, which they borrowed like crazy, and I think all of you know what sector borrowed the most, which is oil and shale, oil companies and stuff. So this is the same type of situation that happened back in October of 2015, where we basically went, October 2014. October 15, where we went berserk on the market. We dropped 1,500 points. This is 2009, by the way. This is the long-term chart. So let me draw this for you guys. We broke the long-term downtrend on the high-yield market. Can everyone see this? And by the way, I'm drawing this for the first time. Can everyone see this?
Yes.
Yep.
So let me draw a really bearish picture coming from a guy who's been pretty bullish on the markets overall, which I'm still bullish in certain ways. This is not a good sign. Just wake up and smell the coffee. Smell the junk bonds. The junk bond market right now whichever way you slice it and dice it, is in the midst of a correction, which means equity markets on any major rallies or any minor rallies have to be sold. So forget that Amazon going to 580 and Google going to, thing. I could be dead wrong, but I would rather be dead wrong as a bull and right as a moderate bull. I'm telling you right now, and I'm not making fun of anybody, okay? Because I've been the one who called Netflix at 700, if people remember, and it got to 700.
So you don't think that's a double bottom there?
Nope. How do you call it this a double bottom? Do you know what
How
a
do
double
you have
bottom?
the-
Let me no, let me finish. Let me correct you right now. A double
Alright.
bottom looks like this. It looks like a nice butt.
Uh-huh.
Okay? This is a double bottom. You want to see a double bottom? A double bottom is almost being created in oil. How can you call this a double bottom? This is basically an ascending triangle, a descending triangle, which can resolve to the upside, which can happen, or it can resolve to the downside. A double bottom looks like this. I know you've asked me this before, Scott. Okay? No, I know. And, I love you. I'm just telling you that straight out. This is what a double bottom looks like. This is not a double bottom.
But I see the bottom of the green candle there, and it's matching about the same where we ended today.
But look at the shape.
Yeah, I give you that. I mean, you don't have long tails or anything, but I'm
No,
saying they've
yeah.
stopped at the same point.
Yeah, I beg to differ. I think this, I like double bottoms look like this, a W formation. Does this look like to you a W formation? It maybe does if it goes up, but to me, I am looking at this as if I'm looking at this thing here, this to me doesn't look like a W formation, because this looks to me, and anyone can correct me if I'm wrong. This to me in no way or form, if I draw this, looks like a W, unless you know something I don't know, which could be correct, that this bounces from here. So we could have a short-term bounce, but I don't think that I don't think this is. I personally don't think that this is a double bottom per se. Short term, yes, you have reflex bounces. We know that, right? Reflex. So let's look at the daily.
Mm-hmm.
Okay, so daily we are reached the bottom here. So are we going to bounce from here short term? Absolutely. So that brings me to my next thing here. S&P 500. It's a good point you brought up. So in the S&P 500, let me remove all the lines. I mean, on a intermediate term basis, that's not a double bottom. And let me get to something here. 1 second. Okay, can everyone see this line?
Yes.
This is the S&P 500. All right. And I'm going to be showing this chart, so please, get used to it. And I've shown this before. So we have the situation here where it's at the bottom of the Darvas, right? And remember the other day in the coaching session, I believe it was Sunday evening. The people with me. Some of you guys remember?
Yes.
Okay. You remember I talked about this where the Darvas was really, it's like a bottleneck, right?
Yeah.
All the internals were showing the bottleneck was going to resolve to the upside. Guess what? I was dead wrong, because the market showed where the bottleneck was going to get resolved. It wanted to resolve to the downside, even though we were doing fine. We were doing fine. So at this point, the bottleneck is still there, correct? You guys see that?
Yes.
Yeah.
Right. So this is the way you read. That's what the word tactical trading comes in. If we all went in heavy short right now, we would probably, on a short-term basis, probably get screwed big time. But look to see what's going on here, and this is how you read it. So you have this Darvas band, which can easily, and guess what? We ended the day, and this is where my eyes, like always, look there. We almost entered the uptrend line again. See that? But we went up, but we couldn't hold it. I mean, the uptrend line is really at 2082. Let's say 2082, round off the decimals, right? So We got up there and we failed. But it's still a candle which looks like it wants to go to the upside, even though it's blood red, right? So the best case scenario for the bulls is that we get up to 2104, which is the top of the bottleneck. And boy, do you short the crap the market out there. Okay, pretty much. Now, look what's happening to the lower Bollinger. This is how your eyes have to read it. This is the reason why you have to take those coaching sessions, for God's sakes, because I'm not going to be doing these webinars every week, okay, for everyone. So I'm serious. So what's happening to the Bollingers here?
Pointing down.
Thanks, right. And this Bollinger is not going to be too long before it starts to curl down again. Now look how you read the charts. Pull up your internals. Remember what I tell people in the coaching sessions. You go to a doctor, you say, I'm sick. He looks at your eyes and say, hey, you've been partying too much, or you're really like not well, you have a cold, you have an allergy. He doesn't know if you're dying of cancer till he does the blood tests. So the first level you do is your blood test. Well, the stochastics are your blood tests, your hemoglobin levels, your cholesterol levels, okay? So right now, do these stochastics really look healthy to you?
Nope.
Can anyone tell me and give me a really bullish scenario? And I'm a bull, believe me, because I wake up every morning, and to me, that's a very bullish event. And I mean that, okay? Every morning I wake up and I look at my screens, it's a very bullish event. So,
well, the stochastics are pointing down, but we are still hanging out at that uptrend line, so that's somewhat positive.
Somewhat positive, because we could draw this. We could draw that. 1 second here. Let me get this line here. We are still there, right? This is still a positive divergence, correct?
Yep.
Yes, exactly. Yep. So that's all fine. That's all fine. But when you look at it just at face value, without pulling your own cognitive bias or cognitive dissonance, look those words up. Cognitive bias. Okay, my cognitive bias is a bull, but I'm a kind of like very cautious bull right now. So based on all these other macro factors that's going out there. Okay, so the point is, like, to me, this tells me that this wants to reset down. Now remember, this is a daily chart, so it doesn't mean it's going to happen right away. So look what's happening to the McClellan oscillator. You guys can all use this on the daily basis. It's not going to make you money on a intraday daily basis. This is what's going to make you money on when I say daily chart, that means over a week or a whole bunch of days. If you want to be a committed bear, you're going to make money. No question about it. If you want to make money on a daily basis, this chart's not going to help you. You know why? Because it's going to do exactly what Scott said. It's going to bounce a little bit, throw you off, throw out false signals, and then all kinds of news will come out. China will say, hey, we're great. We just infused $10 billion into the market, so grannies can go and trade, what do you call it, B-Zun or those crappy stocks again. All right? So great. They're going to feel good. But how long will that last? So the point is, if you look at the McClellan oscillator, the best buy points ever, simple stuff, guys, is down here. Doesn't mean the levels. I'm talking about the technical levels down here. Like, this was the Greek crisis, which I will go over that in a second before I wrap this session up. So these levels are the ones to really get excited about. On a daily basis, means when you want to do a swing trade. Is everyone clear about that? These are great swing buys where you can last a trade for 24 to 48 hours or 72 hours without having to have one, waking up at 4 in the morning to check what the European markets are doing. Now, if you look at the hourly, it's a different story. On the hourly, we are still good. Look at the McClellan. My God, minus 389. So Scott, I'm with you on a short-term basis. We're going to bounce and bounce really hard, in my opinion, as we get to the latter part of the month. You get it? Because this McClellan is really oversold. Minus 389. Oh, but this can last maybe 25 minutes to 30 minutes. I'm telling you right now. This stochastic that you're looking at can go like this. And this is where I keep on putting those alerts out. This is where my value-added service comes in. It can go like this and boom, just like that, get overbought within 20 minutes or within overnight hours that while people are sleeping. You get it? When you see futures up 20, does that mean something to get very excited about? Can I ask people?
No.
Why shouldn't you be? If you're up, if you're up in a couple of S&P calls and a couple of our YouTube calls, you just made yourself a couple of grand for sleeping, having a good night's sleep.
That's if it holds in the morning, though.
Huh? No, when something opens up 20 points, let's not be silly here. I mean, straightforward. Something opens up 20 points. You can't sell in the first 5 minutes.
Sure.
You buy something at 3 and you sell it at 9. So there you go. Sure it will. But you're right. It can dissipate within 3 minutes of the opening, correct? Just the way things did today.
Oh yeah,
Absolutely.
You have to be
and
very
these markets sell the rips totally.
totally. But that's old-fashioned way of thinking. Buy the dips and sell the rips because you don't know what the dips are. And you don't know where the rips are. You know, that's where the technicals come in. So anyway, what I'm getting at is that these long tails like you're talking about are not necessarily good signs, you know? And that's why these watching the technicals and reacting to them are extremely important. Best ways I can say this, and I've said this to Scott, and he does it very well, mind you. And by the way, this is the overnight chart as we're looking at on the spies, okay? This is looking fine right now. I mean, we are well off the 50 and the 30, 34, which they're trending down. Not a good sign. But at least we can bounce up. We can bounce up 10 points, 15 points, easy. Can you make money off that? Yeah, if you're quick. If you're snoozing and say, oh, I have a meeting, I came back, and hey, what the hell happened? Why'd you put that trade alert? I mean, sorry, you know, just leave the room. I'm serious. Just you gotta be there if you're going to be an active trader. If you're looking for swing trades and stuff, then look for major inflection points. Don't trade for a couple of days. Look for major inflection points where we get, you know, and at least on an hourly basis, I can say this is a major inflection point because minus 401 on an hourly on the SPY is truly a horrendous number. But then on the 4-hour basis, it still can go lower. It can go to minus 292. It's only minus 149 on the McClellan oscillator. You think I'm talking jargon? Trust me, this stuff makes money. And not like this is not like that guy. What's his name? Tim Sykes. Who says, "Bring me your 2,000. I can make you 200,000 bucks in 5 days." You know, in a month. I've made more millionaires than whatever. I just like, holy shit, man. These guys are allowed to advertise like that. He's all over the place. He spams my email with crap. I mean, unbelievable. Maybe I should bring him in. There'll be more subscribers, and everybody would, you know, I'll do it, man. You know, I wish I was that crappy a salesman. You know, I mean, I'm a good salesman, trust me. But I can't go that far. You know, I can't be doing boiler room in this crap. All right. So the bottom line is that so that's the whole point here. So we are in a tricky situation right now, and we're getting there. Looking at this here, I would love to buy this. I would love to buy this. So watch the stochastics, and that's what makes you the money. Right now, we don't have a definitive turn. I would love to see the RSI down to these levels. And, you know, it's pretty simple to play it. Now, what makes it difficult is today was truly a capitulation day. Look at this stuff. This is not a joke. Now, if capitulation days happen like this, can somebody give me an answer as to why the market has a hard time going up after you have these butt ugly lines like that? What happens in the following 3 to 5 days in between
Margin
rallies?
clerks.
Huh?
Margin clerks.
Thank you. Margin calls. Absolutely. And I'm not talking about from you and me. I use very little margin. So the bottom line is, I use margin when I buy the stocks and stuff, obviously. But even then, the bottom line is, this is not something that you can just sneeze away and say, oh, it's going to be over. Because institutional margin calls will come back to haunt you 5 days from now. Because that's the amount of time that they give you guys to come up with the money. So if you have a $10 million margin call on $100,000 shares of Apple, guess what? Apple's going to get sold. All right? And it has nothing to do with what the stock is doing. So just letting you guys know. Last thing I'll show you is the weekly chart. Oh, boy. Hold on. Is everyone still with me?
Yes.
Yes.
Okay. I will
Yes.
leave that and I'll just open it up for a couple of quick questions. So when you look at the weekly chart, And believe me, just like everyone else, you know, I actually honestly don't really care if the market goes up and down. I really want the market to just be in a directional bet that we are betting on, and short term and medium term. But intraday, we got to play the scalps. If we're going to have a 200-point rally, I want to be in the S&P calls. If I see that they're hitting my pivots and my resistances, watch my things. I think tonight was helpful with a lot of you guys who are not following the Twitter feed as much as I explained. Act on it. Buy one, buy two. Believe me, buying one or two can make you a couple of grand, because that's the way it works. You know, they're like $8, $9 and they go to $20 or they go to $15. Those frigging puts, which I sold a little bit early, they went from, I'll tell you guys one right now, I'm looking at it. They went from 580 to 22 and a half. These were the 2090 puts, guys. I sold it well above that. Remember, I sold the puts. I had the hedges. The SPY ones went from 88 cents to $2.82. I know some of you guys were in there. So why can't we have a hedge? I mean, it gets to 6 to 23 bucks. When was the last time you bought a stock that went from 6 to 23 bucks? Can you ever, like, seriously sit there, look at yourself in the mirror? Or if you don't want, I really don't like looking at myself in the mirror other than when I shave. So my point is, like, honestly speaking, 6 to 23, and you can't get the meat in the middle? What are you guys doing? Sometimes I ask myself, what am I doing when I'm not in that trade? It's like, come on. Now, did we know it was going to go to 6 to 23? No. But then you could catch the flip side. You could buy them at those $8, $9, $10 levels and 23. Scott will attest to it. So that's what I'm saying. You can do it both ways. And I said this yesterday to VIX. You can make money both ways in this market. Cannot be dogmatic. That's it. So on the weekly charts, this is what I see. This was the acceleration phase. I used to do all these video casts. If you pull my video cast from a while ago, I used to draw this acceleration channel. I called it the acceleration phase of the market from November of 2012, okay? Right here. So let me draw this back again. Okay, right there. Can everyone see this?
Yes.
Okay, so the lower end of the band is the lower end of the SPYs is two. I mean, I'm just playing pure technicals. Let's say this acceleration, you know, we need to. So the lower end of this is 200. SPY 200. Okay, but that's on the weekly. And we need to get to the bottom of this like we did back in October of 2013, exactly 2 years ago coming up. In 2 months, we'll be coming up to that. So if we need to get to the bottom end of the channel, that's the first level that you're targeting. So if you want to have a separate account or in the same account, buy a couple of puts going out to October, let's do it, man. Let's do it just to test yourself that technicals work like magic. Buy some far dated puts at 200, okay? 200, October 200s. Don't have to like get all cozy and say, oh, 202, this and that. Let's say 200. Or you want to get really like at the bottom of the acceleration and 199. Buy some SPY 199 puts and see how beautifully it works without you having to watch that particular position every single day. In between trade, we'll trade, you know, the rest of the garbage. That's not a problem. But at this point on the weekly basis, we are basically curving down. There's no question about it. We are at this point doing this, and I wouldn't be surprised if we even get to 180 to really complete the cycle. And just because it goes to 180 doesn't mean it's the end of the world. We could have a major bounce from here. 180 is what, 1800 on the Dow, something like that, right? I mean 1800 on the S&P. Can we get to 1800 on the S&P? We can absolutely get to 1800 on the S&P. So let me just open up for a couple of quick questions, and we're going to wrap it up. You know, we started at what time did we start? We started at like
7:30 or something.
Oh wow, it's 2.5 hours. All right, go ahead.
I have a question. I actually charted SPX back to like 1960 on the monthly, and if you draw a channel up, it was interesting because we almost touched the top of the channel in this last phase here.
So what are you telling me? It's Armageddon? The Mayans are landing? It's over?
Well, it just seemed interesting because it basically, again, stopped at
What?
that point.
I mean, I have 1996. I wouldn't go back to 1960. The world is different. Anybody who talks about those, Depression era and I mean, not 60 was Depression era. But the point is, I wouldn't go that far. I would simply look at this channel. If you really want to be tactical, I would simply look at this channel. And this is the channel that started, and initial channel that we're going to hold.
So monthly isn't really relevant. We just want to stick to weekly.
This is not a week. This is months and months. Just because it says weeks doesn't mean it's weeks.
No, I'm saying a weekly chart.
Yeah, weekly.
As compared to like a
I'm
monthly.
I'm going back 20 years here. I'm going back 20 years. I refuse to go back any longer because otherwise I'll get a headache. But no. On a monthly chart, we are definitely correcting, no question about that. And of course, the ultimate buying points are when the market's at 16,000, and that's when we are down here. Second question. No, but that's a good point, Scott. Second question. Yeah, Val is correct. We did start at 8:30. Who said 7:30? Yeah. Because I was thinking I was like 2.5 hours, man. I'm still holding on to the same glass of wine. I need to go out and get more. No, I'm just kidding. Okay, so questions. Any questions? Panda? Panda might have left. Rip. I know. Okay, so if there are no questions, yeah, go ahead. Who is this?
This is Vix.
Yeah, Vix, go ahead.
So the trend line for the SPY on the weeklies that you drew,
yeah,
you said 199. So
right there, I didn't say it's showing 190. 199. Right. Yeah, 200 at the bottom. Yeah, go ahead.
Right. So on the weeklies, on the trend line, I'm expecting if we hit like 203 or 202, then it will like heavy bounce.
Okay, this is the short-term picture right now. So what's happening in the short-term picture is a couple of things going on here. This Bollinger falling apart on the left, you see that on the right?
Yeah.
Okay, is a bad sign. That means there are things happening. Remember one thing very important. What happens in the credit markets is not something that shows up on the equity markets immediately. It's like sometimes when you're sick, you don't know you're sick till 3 weeks down the road. You got it? So that's what's going on with the markets right now. I don't know if the markets are really sick or not, but I do believe there's a sickness in the high yield market. And most importantly, in the emerging markets. Look at what's happening with the currency devaluations from Vietnam to China to Thailand and all kinds of stuff. These are very important markets, okay? India included. So the bottom line is just because the emerging markets are going through what we say in New York, a conniption, okay? That's a old Jewish term. So the point is that when you go through that type of thing, it's not something that resolves itself in one day. So over the short term, going into the month of September and stuff, it is the market's feeling very uncomfortable with a lot of things because they can't put their finger on it. Now, here's the good news. The individual investor is not directly involved with the market, okay? Other than their 401ks and their mutual funds. So they are not being directly hurt because if you look at the sentiment levels that I keep on showing, and you can look at it yourself, there's extremely low level, there's high levels of despondency and absolutely no euphoria or happiness in the market. You get it? So those are the positives. But that doesn't mean that the credit market really gives a shit about that. You know what I'm saying, Vix? Vix, you still there? Hello? Vix, you left?
Yes, sorry, I was on the mute. Thank you.
Okay, so that's basically what it means. Now, Wishing asked me, do you sell opposite when you put out hedge? What does that exactly mean? Can somebody explain to me? Do you sell opposite when you put out hedge? Yes, when you put out a hedge, it simply means you're hedging by buying puts. That's the reason why those did so well with the puts, while some of those long positions were down and I dollar cost average down. Yes, hedging means you protect yourself on the downside. It's like buying insurance. So Wishing, you want a car? She's going to talk to me on the chat. Okay, she won't tell me she owns a car. Okay.
Hey, Clue, Vix again.
Go ahead,
Hey,
Vic.
Clue, Vix again. So can you explain like the proportion? I know you would say it depends
Proportion
on
of the hedges.
profile.
Generally, if I have some long positions, the proportion of the hedges will anywhere be from 10 to 20% of that trading positions that are out there.
You lose less money. That's the idea.
So roughly about 20%, correct. So if let's say I'll give you a simple example. If I have $1,000 out there on the long side, I wish I had $1,000 on the long side, but sometimes too much portfolio is like out of control. Today was like, I said this a long time ago, it's like financial pornography, okay? Serious, like today, it was unbelievable. It's beautiful though, the way it ended. Anyway, so the point is that, what do you call, yes, 20%, some cases a little bit more, but that would be the case, yes. Or sometimes when I'm really like out of those positions, like right now, I took a lot of stuff out, right? So I don't have puts and stuff out there. I want to reevaluate the situation tomorrow. So the thing is, sometimes I'll just be in those puts, small amounts, because anytime I get a little too bearish on things and I try to explain these things in too much minute detail, guess what the algos do? They rip the market higher. So generally about 20%, you can go as high as 30%, VIX. But that's a high number, just so you know that. That's a high number. Now remember one thing, VIX, you still there?
Yes, I'm here.
Here's the key point.
Yes.
If the trend changes, I'm going to have a heck of a lot more. In fact, I'll swipe my portfolio where I'll have longer short hedges and some longs. You get it? So I don't know if the trend change is occurring right now or whether it's going to occur a month from now. So remember that. It all depends on the primary trend. The primary trend so far has been up. So if the primary trend changes, then I will change accordingly with my hedges. In fact, my top trades will be on the short side, and then the hedges will be the longs. You get it?
So basically, you invert your bias then if you
yes, that's correct. That's correct. And I did that back in the 2008, 2009 time frame. And so I would say that that is very correct. And who said that?
Tango.
Oh, there you go. Yeah, exactly. So I would invert my bias. It is all about primary directions and stuff. I don't know if the whole primary direction, nobody knows till like months down the road, right? So I shouldn't be there. Whether the primary direction of the market is going to be like this. I don't know that yet. Because every time that the primary direction went like this, it went like this, right? So we are in a volatility phase. So unless it breaks well below the 204 level and well below the 200 level, that's when the real primary trend comes into place, guys. You get it? But when it gets here, you know what happens? Bang. So everyone gets, So I don't think anybody has the capacity to read that because I don't think anybody actually knows. So that's why we play intermediate time frames on this thing. Any questions? That's it? Okay. So guys, in summary, everyone, you really have to be flexible. Read every one of my posts. I am putting more and more annotations and stuff directly on the charts. Learn how to read them. Take the group coaching sessions, for God's sakes, for yourself, to make my life easier and make a lot of money. Because we don't really care if the market goes up or down. We just want to be in the right direction. So make yourself happy. I don't want to be a dogmatic bear. In that case, just do opposite of what I do. Because you know what? If I'm thinking like that in a big way where I'm like, that's it, it's all over, it's the shorts and stuff, then what's the rest of the world doing? Then that fear indicator is going to go to -5, which it can't do. Okay? Because everybody is scared. Everybody. Trust me. I'm being cautious, not being like outrightly like, oh man, this is it. I can never buy a stock for a couple of points. But we can make a lot of points on this stuff. But I will warn you about something. There is a dislocation in the global credit markets that is concerning a lot of big players. And that's something you have to know. And when these big sell program just hit us from nowhere, let's not look at it, just react immediately. All right? Because that's just the way it is. Everyone got it?
Got it.
All right. Listen, have a great evening. 10:20. And I will see you guys tomorrow.
Thanks, Frank.
Thank you for listening. Bye-bye.
Thank you, Frank.
Yep,
Thanks, brother.
anytime. Bye-bye.